Well, good afternoon. I'm Alan Sykes, and with me today is Scotty Sykes with Sykes and Company, and also Greco De Valencia with Live Oak Bank from California. We're excited to have everyone with us today on I think this is the second Master the Margin Pharmacy Influence series we've done in 2022. Today, we are going to have a conversation. That's the way we like to keep it uh, about pharmacy financing alternatives and options and what's happening in the industry. And we encourage you very much so to ask your questions as we go through. We've got the question things already queued up, so it's not too early to start putting those on, and we'll try to answer those as we go through. So again, welcome to us to the session today, and Scotty, we'll let you take it from there.
Yeah, just a quick disclaimer. Everything we're talking about here is informational purposes only, educational. So speak with your advisors, obviously, before acting on anything we discuss here today. But Greco, we're delighted to have you today. And why don't you just kind of start us off with a little background on you real quick and what you're seeing in the industry today.
Sure. Thanks, Alan, Scotty. Appreciate you guys having me on. I'm excited to be on my first Master of the Margins. I've been, I'll take kind of a cue from radio, long time listener. So first time caller, first time presenter. I'm happy to be on. Yeah, and my name's Greco. I'm the Senior Loan Officer and Vice President of the Pharmacy Vertical at Live Oak Bank. And Live Oak Bank, we're dedicated to lending to independent pharmacies. We have been since 2010. And we are the #1 SBA lender in the space, but we also do non-SBA lending as well to the pharmacy space, which is pretty exciting because, as we're going to talk about today, and strategies for growth, the market is changing, and there's been quite a bit that's happened over the last 2 years, obviously, and I think there's going to be a lot that's going to happen over the next couple. And I'm excited to be here and share. I think we got some great minds and a lot of time here in the space. I've been with the bank for almost 7 years now. I've been in the independent pharmacy space for over 10 and working exclusively with independent pharmacies. So excited to be here. Thanks a lot.
Awesome. And so Greco, what kind of give us a little overview of what you're seeing in the industry today, how COVID really is impacting the pharmacy industry, and how you see that impacting pharmacies going forward, especially in terms of growth and that sort of thing.
Yeah. So, we work with exclusively independent pharmacies. So we're looking at pharmacy financials, every day, and we're talking to our customers and keeping a finger on the pulse of what's been occurring. And really the last 2 years, has been unique, to say the least. But for a lot of independent pharmacies, they've been experiencing, if they've been doing immunizations and COVID vaccines, even though there may be some mixed messages out there on the turn rate they're getting on reimbursements, but it's been big for them. They've been able to pick up high profitable areas. They've been doing COVID testing. I know many pharmacies who have made upwards to a couple 100,000, at least in the 6 digits. I'm sure you guys have seen the same on some of your clients. And there's been a newfound attention on the independent pharmacy within the community, which I think has been great for them. Obviously, there's been challenges as well. There's been some staffing issues. You've had to do some pivot in the business models at times due to safety and health protocols. But for the most part, I think, what looked like was going to be a very doom and gloom situation for the independent pharmacies, and frankly was a challenging time leading up to COVID. With the release of PPP, with the release of some of the other COVID relief programs that were out there, and then of course, being able to service customers in a way and be essential to their health and essential to the community, it's been great in that way. And then as you're looking into kind of the future here, some of the things that we've been seeing and out there in the news, the closure of nearly almost, what is it, Alan and Scotty, almost 300 stores from one of the
year, I believe it is.
Yeah, of one of the largest regional chains. And so kind of when you look at what does that mean out there for the independent space? Well, obviously, you're going to have less competition in perhaps your specific area, but more importantly, as you look at what happens typically in those types of situations, if you look at other corporations that have done so, they may not be as aggressive in their acquisition modes. They're going to be kind of pivoting in their own way, looking at how can they retain business, or perhaps how are they going to then shift to some of their other areas. And as those places close, well, what does that mean for other independents if they're potentially, attractive to them as acquisitions, or what is that going to do to the independent pharmacy to increase their market share? And that's something that I think is going to happen, right? I think there's going to be a big opportunity out there for independents to now purchase other independents. You're kind of eliminating maybe a competitor when it comes to the acquisition space, or at least maybe even in the table a little bit. And it's going to give them an opportunity, maybe increase their opportunities to take up file buys, which we're going to talk about a little bit today. And also, I think, Olin, something you say all the time, which is be able to maybe buy that second or third store. And we were talking earlier before the show started, how to go big or go home, right? Buy that. If you've owned that store that does $3 million, $4 million, you've been doing great, but now there's an opportunity to buy the $7 to $8 million store where, someone who may be looking at buying them before is focused on other things. And it's a chance to really independents to work with independents. So we're going to talk a little bit today, I think, about some of the do's and don'ts of that, some of the strategies you got to be looking out for when you're doing that, and then obviously some of the financing options that are out there. So Scotty, that's a little rundown of kind of what I've been seeing and what I see for the future. What do you guys think about that? I mean, what have you seen in some of your
Just a
clients?
couple of comments, Greco. Obviously, the last 2 years with COVID, with PPP, with the EIDL loans, with the SBA 7A program that I know you guys are largely involved in, and with what's happening in the industry. The participants on this program today are probably pretty stressed. They probably are looking for employees that they cannot find or locate. I know many stores that we're working with, and we work with hundreds of pharmacies all over the country, are lacking proper staff, but yet at the same time, even though the DRF situation is completely out of control, generally speaking, unless your star ratings are just 5 across the board, you've had a lot of cash flow opportunities in the clinical side here over the last 2 years, and with these outside CARE Act type lending programs, with HHS, others, cash flow has generally been pretty doggone good. And as a result of that, we are constantly seeing, is not a day goes by, Greco, that I don't get a call from someone who's either has found a store to purchase, has an opportunity to buy files, is looking to buy somebody, a boomer like myself who is retiring, or any number of things, or sees an opportunity even for a startup. The NCPA in their ownership workshop program, which we just finished a couple weekends ago, over half the class is looking to do startups. So there's just a whole lot of areas right now with pharmacy. And even though the pharmacists have been working their bones off here in the last few years, generally speaking, their cash flow, their margins have typically improved as a result of COVID. Now that probably will come to an end to some degree. We hope it does. We hope it certainly doesn't continue like it's been for the last 18 months or so. But this has transformed the entire industry. And then CVS comes on top of that with their closure over the next 3 years. And then some of these larger regionals that have closed. I have never seen so many opportunities in my life right now for independent pharmacy, period. It's a question of those who really have the guts, maybe that's not the right word, and the resources, which is one of the reasons we're on this call today, to be able to reach out and to purchase those files, and in some cases, buy real estate that they need in order to expand their business with respect to this situation. So that's kind of what we're seeing. Scotty, you want to add to that?
I mean, I would totally agree. And, with strong balance sheets at pharmacies right now, again, with all the COVID relief, EIDL programs and such, and with the point of care testing and with the COVID testing we've seen pharmacies jump on, you know, getting a taste of the kind of margin, the kind of cash flow from these other ancillary services other than filling scripts is really a turning point for a lot of pharmacies, because they're seeing that, hey, I can do this or this and get some really solid cash flow, good margin stuff. And it's so I think you're also seeing that that shift for a lot of those in the industry towards these clinical type services, and how beneficial that can be not only for their pharmacy but for their patients as well. So I think that's also in there. And like you said, the opportunities I think are just through the roof right now. And this is just a great time to be a pharmacy, be a pharmacist, serving your community and showing really those patients of yours, you know, really what you guys can do best, which is take care of them and grow and be there for them in their communities. So again, I think it's a great thing what's going on here, but we'll just have to see how it keeps going.
But you know, Greco, it always kind of, you get that call where somebody says, well, so and so is retiring, or I see an opportunity to buy these files from a store that's closing, whatever reason, and then, you know, how do I finance it? What do I do? Do I set up a separate entity? Who do I call? So you might want to talk about, Greco, just the file buy situation, how you see that working and how you see the leveraging of existing pharmacies to assist in that.
Yeah, so perfect situation here. So just recently received a call from a great customer of ours, helped him buy his first pharmacy, helped him buy his second pharmacy, calls me up, says, hey, I have an opportunity. I want to be able to buy a local competitor, a little smaller volume, but I have a strategy on how I'm going to be able to roll their customer base into mine. He does all the things that I think all and you promote all the time, right? All those ancillary services that, while they're not going to be huge money makers on their own, but when you combine them together, along with the retail services and the value that it brings, it's increasing profit per script. And I always tell people all the time, that's the name of the game. How are you going to try to increase gross profit per script? I know it's not always easy, but that's the name of the game, right? And so gentleman calls me up and says, hey, listen, here's the situation. I go, well, why is the person looking to sell? And the storyline basically was, well, they had been, you know, a little smaller volume. They had been looking at, a chain had been looking to buy them, but because of what's occurring in the marketplace with them closing a lot of locations and pivoting away from that, that doesn't happen, right? And they're ready to get out. So now they're looking at selling to the independent. They're going to be able to buy the files. So how are we going to accomplish that? Well, first and foremost, I mean, he's buying really the gross profit of the business, accounted for a little bit of attrition, but if done correctly, you know, it doesn't have to be a 25% attrition and messaged right. And especially right now, I think the customer wants to continue to be serviced by the independent because of all that goodwill that the independent has been able to provide in their community. Always been there, but I think, you know, if there's a couple positives that have come out of COVID, you know, it's been that spotlight on them, right? So I think that's the first thing that they're looking at doing. And his strategy is he's basically saying, hey, listen, I can automatically grow the market share within the community, and I'm bringing over these lives, right? And what I'm going to be able to do is then integrate them into my own ecosystem of my business that I'm doing, and be able to offer them all these ancillary services that they might not know about. And the gentleman's a great, you know, let's just call it what it is. He's a great salesperson, a great marketing person. He asked them, hey, listen, when you come over, tell your friends, tell the other people that you might have, tell your other family members, let me help them. So he's not looking at it as bringing on just one life. He's bringing it on, potentially bringing on 1 to 3 lives if he does it well. And so he's buying over that gross profit. So when we're looking at, okay, well, what kind of product is really going to fit this, right? The SBA product, and this is a good segue here into how I think customers can also transition as they start an SBA and then expand. You know, an SBA loan is going to be a great one for them. He's going to have flexible payment options. He's going to be able to leverage the cash flow of his existing business and the potential projections of the gross profit of the new business. And he already has operating expenses and efficiencies. Maybe they might go up a little bit as he retains some of the key employees, but for the most part, the gross profit's going to be much higher than what the overall expenses are going to be to bring those people over. And Scotty, you said it right. His cash flow is looking great. His balance sheet is looking great right now. So he sees it as a great opportunity to be able to say, hey, look, let me use some of that. Let me strike while the iron's hot now in the eyes of the bank, and be able to bring this business over. And we're structuring it appropriately where he is doing so. The customer is working with the potential seller to have the correct messaging and marketing, where he's going to try to keep that attrition rate low, even though he's accounting for it, right? And it's a great opportunity for him to leverage that cash flow, minimum down payment, flexible options. And the best part is too, he's buying some of the inventory, but we're giving him some of that working capital so that he can account for any interruption, any future payables that might happen, so he doesn't have any interruptions in his current store. And he's automatically growing it, and it's going to be a win-win not only for himself but for the seller, because they've been looking to exit, right? But their potential suitor's no longer interested, and it stays independent, and that's the biggest thing. And so, Alan, I think right there's a real life example of somebody we're working with that's going on. I'm sure, Alan, you've got a lot of clients that are probably looking at that same situation.
Yeah, and I think I may know someone you're talking about right now, as a matter of fact, who I got that similar call within the last few weeks as well. And on top of that, Greco, when you take a situation like what you just described, and I believe a good friend of ours, Peter Wolf, is on the call here from Louisiana down in the Bayou. Peter has gone into compliance packaging really large and doing a lot of delivery outside of his general area. But just think about it: if there were 3 stores, 2 of which are yours, one was a competitor, and now you're buying out the files, and there's no other stores in that immediate area, and you're in compliance packaging, just think of what you can do to own that market as far as taking care of your patients, providing that service, growing the scripts, as well as growing other clinical services, providing delivery services and all other kinds of ancillary services here. But you literally can own that market and grow your gross margin and your net profit dramatically larger in a situation like this. And with you leveraging the future cash flow of that file buy, which is essentially leveraging the future gross margin, as you mentioned, of the capabilities that you got in that opportunity, again, with long-term financing, with the SBA backing, and then with an injection, if needed, of an appropriate amount of working capital to take care of those increased accounts payable and volume that you're going to have, especially those first few months before the cash flow really starts to turn. Oh, what a wonderful opportunity. And we're seeing a lot of these kinds of transactions across the entire country, without question. And as you've just suggested, you might even want to touch base a little bit further and dig into it, how it can be done really with minimum down payment and leveraging the existing entity that they already own, that perhaps they either own outright or have another SBA loan on already. Talk a little bit about how that could be worked in a situation of this nature.
Yeah, absolutely. So yeah, there's this is something that I think is overlooked with the SBA program, is there's flexible structures and options if you're working with someone who knows how to guide you through it, both from a business structure standpoint, but then also complying with SBA regulations so that you can actually get the loan approved and closed. But there are ways that you can do there, flexible structures where you can use your existing entity as a cross-guarantor and a co-borrower, purchase the other business, and be able to have flexible options on the down payments where they can now fit your strategy and what you're looking to do. And ultimately, Alan, that's what we're talking about, right? We're talking about a strategic vision for growth, right? I know you
Yes.
said earlier guts, and I agree. We all got to have a little fortitude in business, right? But really, it comes down to strategy and a strategic vision on how you're going to do things. And 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 by talking to a lender, talking to somebody who knows how to align the structure with your vision and strategy and leverage the business in a good way. There are ways to leverage businesses in positive manners, right? There are ways to use leverage strategically and in the right way. You can, as you said, really grow your market share. And I truly believe, I agree with everybody. It's because there are probably a lot of people listening right now going, guys, it's tough out there. And it is challenging. No one's saying that, entrepreneurship and business ownership is easy. My wife owns a business. I know firsthand, I see it, in our household. But if done well and strategically, it can be successful, and we are seeing it. We're seeing a lot of individuals right now. They know it. They hear it in their community, and they're going out there and they're striking while previously other competitors were out there probably snatching them up at some unrealistic expectations. And now they're saying, hey, listen, let's work together. And here's my vision. And where someone's maybe strategy fell short, another individual's strategy is going to be successful. And that's the name of the game. And that's what we're trying to work with.
So Greco, when we talk about a file buy, we're talking about, this is an asset purchase here where you're seeing another pharmacy out there. You're purchasing the prescription files, if you will, maybe some inventory or whatnot out of there. So
Right.
That's kind of what we're talking about there. But I wanted to give that little background just for the viewer out there. But secondly, Greco, what are you looking for as a bank? What are you looking for? Because say you're a pharmacy owner out there listening, and you say, well, am I right as a buyer? Is my pharmacy, can I leverage my pharmacy? So what are you looking for, from a buyer's perspective, to know whether this is a right opportunity for them or not? What are the pros and cons there? If you're a
Great question, and you're right, Scotty. That's a great level set, right? Is we are talking essentially about an asset. You are buying the asset, you're not buying the stock, because that doesn't really work, right? I mean, that's and we can dig into the tax implications on that. In fact, I think it's always valuable to hear your guys' input on that. But essentially, that is what we're talking about, right? You're buying the assets, the script files, and the inventory. You're transferring them over.
Typically, you are talking about buying the assets, Greco. Although we can talk about how it can be done differently.
Okay. Yeah,
separately.
Go ahead.
I'm sorry, I didn't mean to interrupt.
No, that's okay. No, so Scotty, to answer your direct question, what are we looking for? I mean, what I do is I'm looking at an individual's current business, and I'm looking at the trends of it. And sometimes there may be a short time period there on the trends. They may have only owned it for a couple of years. But oftentimes, the first thing I'm looking at is I'm looking at the KPIs of their business, the revenues, cost of goods sold, gross profit, wages, and operating expenses. Just the basic KPIs that you guys go into all the time and do a great job of benchmarking. I think you guys do a fantastic job about that. And benchmarking is very important, by the way, to all the listeners out there. You got to benchmark yourself against the averages that are out there. And so, right? It's just like testing, like we used to do in college and school, right? We got to know, are we above average? Are we right there? Or are we below it? And so that's the first thing we're doing, Scotty, I'm doing is I'm looking at their P&Ls, I'm looking at their balance sheets. And then I'm having a conversation with them, because at the end of the day, business is a lot about talking to somebody and understanding their strategy and vision. And I'm seeing about how they've been managing their businesses, and I'm looking for just the telltale signs of that strategy and that vision, right? That fortitude. Here's how I've been growing. Here's what I'm doing in my business plan. Here's what we're out there marketing and selling to the community, and becoming an integral part of it. And I'll be honest with you, if they come to me and they say, hey, listen, we're right there on cash. I'm past my break-even point, and I'm ready to break into that next market. And now I'm going to be able to buy some scripts. Maybe it's only 100 or 150 scripts a day that I'm buying. But here's my vision for it. Now, in my opinion, you can look on the projections along with the current cash flow of their business, and you can combine it and say, okay, there's something there that's going to be able to turn these scripts profitable because they already have a vision of doing it. They may not be knocking it out of the park where they're, netting 500K a year and everything's just great, but they may have just be turning the corner, and now they have this opportunity to get into a little larger space, and we're willing to look at that. And that's a big thing for me, right? Is how have you managed your business, how you've been growing, how do you know your KPIs, and where are you going to increase it, how are you going to increase profit per script. And even if it's a marginal increase of a couple of dollars, $3, I mean, Olin, you see it. Even the smallest increase of gross profit per script, if you manage your operating expenses accordingly, can really mean a lot for the bottom line, and then flowing over to the balance sheet can really help pump up the balance sheet and the equity in the business.
Greco, we've got a good question in here, several good questions already. One is from Scott. He says, what is the current model being used to buy RX files? And what he's referring to is like he sometimes will hear of a per dollar per script file amount. What are you typically hearing in marketplace?
Yeah, I mean, we don't really get into too much of the actual valuation of the business. We're looking at more of the finances and how it's going to look as far as the debt service. But I think from the market, what I've been hearing is on the file buys, a price per script. I have still been hearing that, but it's been ranging, and I would say it's, maybe ranging a little smaller than it was previously. But it really comes down to, for us, it really comes down to the cash flow, right? What the buyer and the seller have kind of agreed upon as a price for the business. But price per script is what I am still seeing, because when you look at an EBITDA, right, that's and a multiple of, that's really accounting for buying the whole business as it is, right? Including the operating expenses and everything. Much different transaction. I know you mentioned Olin.
Yeah.
There's ways to maybe structure it.
And many times, Greco, that can be a part of the equation as far as either a file buy or buying the entity as a whole. And then you've got the issue of, well, how do you handle it? How do you set it up? How do you deal with the tax issues involved around it? Are you better off with an asset purchase, or are you better off with a common stock purchase? And obviously what the valuations are. Those are obviously the things that we get down in the trenches on here constantly and continuously. But I can just say that if you're looking at a potential transaction where you either have a file buy or you have an opportunity to buy the entity as a whole, it could be advantageous for you to consider buying the entity as a whole. But you've got to do some very serious due diligence in that process in order to be able to make that determination. And then again, how you set that up, whether you fold that into your current entity that you have, same federal ID number, same DEA number, same contracts, or whether you separately set that up, put maybe a PIC as a minority owner in one of the locations, that can get very complicated. But also there's some tremendous tax attributes here that can be dealt with that go beyond the conversation today. But just let folks know on the call that we see a lot of that and a lot of choices that are available. And before, let me just say this, before you start deciding on valuations, you need to really do a certain amount of due diligence to determine what's going to be the best way to handle a potential transfer here, and what the options are. And you've got to not depend, remember this, if there's only one thing you remember today, do not depend on the financial statements and the tax returns that are provided to you by the seller. Assume that data is no good. Get hold of the accounting files, do your own due diligence with your own professional team that understands pharmacy. If they don't understand pharmacy, find somebody who does. Do your own due diligence, then you can look at structuring a transaction that makes the most sense. But we see a lot of these kinds of things constantly, Greco, that require a lot of attention, and sometimes people just overlook these types of things here on the front end, and it's very important to do that dive on the front end.
And the tax implications can can completely shift the whole deal as well. I
Absolutely,
mean,
they can.
Yeah, yeah,
gotta
and
consider
you
those
know,
tax changes.
and Alan and Scotty, Alan, you bring up a good point, right? I mean, when we're talking about increasing market share through a file buy, oftentimes you have to look at the geographic distance, right? And that transfer over. But I've talked to individuals before who are weighing, should I buy the files or should I buy the asset or stock and keep the entity, the brick and mortar as is, because that location is actually better than the one they currently have
Exactly.
and actually fits some of the strategies and vision that they've got for their business that maybe they didn't have when they started it or purchased it 2, 3, 4, however long way it is. But now they've got an opportunity because the proof of concept of their ownership has been achieved in their first store. And now they're looking at, hey, is this other space potentially a better one for me? So to your point, Alan, that has to be considered too, right? And it has
Oh,
to be
absolutely.
considered.
And there may
Does it?
be technology already installed and working in
Right,
that second physical location that's
right,
better than yours.
right, right, right.
If you're looking at just trashing that, you might be making a serious mistake in that process.
Mm-hmm.
Great,
Yep,
great point,
yep,
Grego.
yep.
Great
I
point.
agree.
Here's one other question before we go to the next slide here. We've got Kevin wants to know, he says, my business partner is looking to retire within the next 2 years. I have at least another 4 years to work. How should we be working this transaction ownership? How should we be working this to transition ownership to an eager buyer? I never wanted to sell to a chain.
Well, that first and foremost. Good for you for having a stance. So you don't want to sell to a chain. You've already identified that you want to sell to an independent. So I think that first and foremost, I tell people all the time, make the decision. Who's your ideal buyer? Okay, then go out there and seek it, and then put together a plan for how you're going to transition. So I believe the question first, Kevin, right? Colin, you said.
Yes.
So Kevin, good for you for thinking ahead, right? You want to plan this out. I know Alan, Scotty, you guys are big on that, right? Like plan it out. First, well, in my opinion, first is you got to first have your financials in order, right? If you've got multiple locations or whatever it's going to be, have your financials in order and start to look at those KPIs and how can you then maximize some of them in order to show the profit of the business accordingly, maybe on 1 to 2 years tax returns, so the historical cash flow is there so that you can get the maximum when you look to sell, but also a bank and a buyer is going to be able to really see the true value of the business. It's not going to be buried in a lot of ad backs, and then it's going to be more attractive to a buyer. And then finally, I would say, understand what it's going to take for a buyer to be able to qualify for a transaction, depending on what your purchase price or your desired purchase price might be. But be aware that purchase price might change a little bit based on trends as it goes out for 4 years. But to me, just high level, I think that's some critical pieces. Alan, Scotty, what are your thoughts?
I think you highlighted something, if you're a seller out there, first and foremost, I mean, you just highlighted it. Get those financials in order, start, get that accounting where it needs to be, get your tax returns where they need to be, getting that financial house in order 5 years out before is going to maximize this value you're looking to do. So I think, you touching on that's important as well, because I'm sure there's some sellers out there listening to this as well.
Yeah.
I think identifying also, Kevin, potential candidates that either are working with you now or could be working with you in the coming years to get familiar with your business that could have an interest in taking and buying into the situation down the road might be something to consider as well. So I would just add that comment here before we went on.
As a matter of fact.
And everybody really quick, sorry, Scotty, but everybody really quick, I host a pharmacy office hours twice a month. I just type my email address in the chat box. Send me an email if you'd like. I can forward you the registration link, or you can always look for me on LinkedIn under my name, Live Oak Bank, and I post the registration hours. And I go into in depth the same topic, right? How to prepare, what the buyer, all into your point, what a buyer might look like, the ideal buyer, and how to candidate. So everybody hop on that if you can. I do it twice a month, and we'll talk more about that, Kevin, if you have questions about how that will go. But anyway, sorry, Scotty, I felt it was important to put that out there for everybody.
And another related question here, is there such thing as a zero down payment program? Devin wants to know.
There is a possibility for that, depending on the structure, depending on the qualification. But yes, there is an opportunity for that. Every situation is its own unique situation. So I would encourage whoever's looking at it, you always want to have a one-on-one conversation with a qualified SBA lender to understand what the bank criteria might be, but also, how it can be done. But there are ways to do it. Yes, there's flexible options that are available there.
And that kind of walks right into the purchasing your second, third, and fourth store.
Yeah.
On this slide.
Yeah. Well, we have seen a growth of multi-store owners, right? And I'll never forget, I was at a conference before COVID, and is in Texas, and a gentleman walks up to me. He was talking to me, telling me he's been owning his store for 30 or 40 years, and he says to me, he goes, I was talking to him about people buying a lot of stores, and he goes, why would anybody want more than one problem? And I kind of chuckled at that, and I said, yeah, well, a lot of people like to buy more. And I always remember that, and I kind of chuckled, but that just goes to show how much things have changed over the years, that people are buying multiple locations for a lot of different reasons. And some of that is, the changes in the market share, and some of that might also be in the business model of pharmacy. It's perhaps changed to where it's more of a economies of scale than an economies of scope business, or maybe it's an intersection of the two, right? The more locations you might have, the more volume you might have, the more you can aggregate it for purchasing power, or cross with synergies on the businesses. So we've been seeing that. So these multiple location acquisitions have become, whatever anybody might think about them, have become a strategy for growing market shares within businesses. Some of them within the state that they operate, some of them outside of the state, and there's positives and negatives for both, right? And I know we can talk in length about this, Alan, but these are some of the other ways that people can do them. And as you look at financing, there's SBA options, but then there's also non-SBA, depending on where you are in the paradigm of growth with multi-location. So that is a big piece that we've been seeing, and increasing in the market share now.
And Greco, here's a really good question. If you're purchasing a separate location, is it always best to open the new store under a separate corporate entity? What are your thoughts on that?
Well, I think that kind of gets into the question of asset versus stock, right, Alan? I mean, if I'm understanding the question correctly, am I kind of tracking what I think the person might be asking?
There's no always best. I mean, there's no always best in that situation.
Right. Yeah.
It's going to be
while there's no always best, let me just say this. Our preference generally is, if you're buying essentially the entity assets, that would be the assets, in some cases liabilities. If there's real estate involved, normally putting that into a separate legal entity may make the most sense. Again, there's not always best situation. You got to look at all the issues involved here. But what happens if you combine multiple entities into one legal entity is ultimately you may want a PIC to own a piece of one store, and you've got 3, 4, 5 stores under one legal entity. What are you going to do?
Yeah.
Going to spin off a store and go through all that tax legal headache to spin off an operation? We generally see, that's a big word, generally, see multiple store enterprises having separate legal enterprises. And once you get to 5 or 6 stores, probably having some type of holding company to be the administrative asset of the entities providing administrative services. Not always the case, but we do see that in models where they're larger than 1 or 2 or 3 stores.
Yeah. Yeah. I mean, so from a financing standpoint, it's really up to the individual. You know, there's ways,
Yes,
if you want to essentially roll all assets and purchases into one entity that you currently own, that's your choice, and the financing institution can do that. Okay, so that's a kind of a preference. Now, if you want to get into what is the best strategy when you're looking at the specific location, asset versus stock, you know, you got to again look at, well, a lot of factors, right? What is the business model of the business? Are there any contracts, or is there anything in the business that is not transferable through a power of attorney, where it could be impactful to the cash flow of that business, the future operations of it, whether it be for a year or 2 or however long it is, if you do not retain all those specific contracts? And so then it may lead you into, well, I have to do a stock purchase because of X, Y, and Z version, right? And then, you know, I'm not a lawyer here, so I seek everybody, you know, always seek proper legal counsel from someone who understands pharmacy law and transactions. But, you know, when you're doing a stock purchase, you're buying everything, right? The good, bad, the ugly, the skeletons that are in the closet. And you got to know, how's that going to impact me, right? And then obviously, Alan, to your point, there's tax implications from the two, and so that has to be considered. But, you know, I think, Alan, you're hitting on a really good point, right? I mean, I look at this with a lot of multi-store owners. In my personal opinion, when I'm talking to somebody who might own 6, 7, 8 stores, right, and they're looking at growing their market share, one of the questions I ask them all the time is, who are your A players, who are your B players, and who are your C players? And how do you know who the A players are? How do you know who the B players are? How do you get your B players to become A players? How do you get your C players to maybe become B players, or maybe you might have to cut your C players? But how do you do that if you have them all rolled up into one entity, one tax document? Now, there's a lot of ways people can do it, and I'm sure, Alan, you probably see it, that through a P&L maybe you can balance it. But the ones that I think are the simplest are the ones, as you mentioned, Alan, that are broken out into separate tax return LLCs, because then you can clearly see who are my A players, who are my B players, who are my C players. And I use that a lot to individuals. And look, I didn't make that up. Someone who owns a lot of businesses, who I consider a mentor, taught me that, basically, right? And he said, you know, you got to know who your A players are. And when you're looking at buying businesses, are you buying a B player? Are you buying a C player? Or are you buying an A player? If you buy a B or C, you're buying value if you know how to make them into A players. And that's, again, getting into that strategic vision. But how do you do that if you don't know, or if they're all combined into kind of a muddled mess? And I think, Alan, to your point, sellers, how are you going to really get the maximum value out of that if it's not separated? So yeah, that's just a strategic consideration I think you have to have. A lot of info there, I know, but you know, it's my opinion.
And I think it's very important that if you got multiple entities in one legal entity, that the P&Ls definitely are class coded, meaning you've got separate P&Ls for each legal entity. I mean, for each pharmacy per se, and can properly allocate your cost as well as your revenues for each of those entities, although there's only going to be one balance sheet. And sometimes that becomes an issue for you, I know, on the financing front when somebody goes to finance something.
Yeah.
Got another question here. from Peter. It says, what can and cannot be used as far as SBA funds are concerned in operations of a business, remodel, building, purchase, another location? I think the question is, what can and cannot be used if you're doing a remodel or buying a building or another location if you're using SBA funds?
Yeah, I think what he's asking is basically, what's eligible for use of funds,
Yep,
right?
I think so.
And really, it's pretty broad, the use of funds, right? I mean, just simple purchase of assets, working capital. You can do real estate, furnitures and fixtures. I mean, it's a pretty broad spectrum out there on what can be used for SBA, and that's why it's a great product. Now, of course, if you're working with a PLP lender who's a preferred lender, they're going to know the SOP, the standard operating procedures, and in order to get the transactions done quickly and in-house, they're going to have to abide by those SOPs. So there are some times, though, there are times when a structure is a good one. Alan, you probably, Scotty, you guys see this a lot. Sometimes there's a deal out there, excuse me, a structure that's really good, but might not fit within the SBA box. Well, there is then now an opportunity for where perhaps a non-SBA or conventional loan might be a good fit. Things you have to consider with that as well, terms. But there's eligible uses that might work for an SBA that might not work for a conventional, and vice versa. I think that's the great part about working with Live Oak Bank. There's flexible options out there, and we know both products are available that match the needs of the market share. So, to quickly answer Peter's question, it's pretty broad. So I would say if you have an individual project that you're looking at, please feel free to shoot me an email and contact me so we can talk directly about it. But it's fairly broad and flexible.
But I think the point you're also trying to make here, Greco, is that Live Oak is doing both SBA 7A conventional type of loans from that perspective, but also has a capability of doing other kinds of loans separate and distinct from an SBA loan in the right situation.
Correct. Yep. We have been, and that's something that's bifurcated over the years here with our company, because that's what the market is required, right? I mean,
correct.
You go back to the, as a customer goes through and they're buying businesses, they're an SBA candidate, perhaps, let's say in general, and then they eventually mature out, perhaps, and they have, they still want to work with someone who knows the space. They still want to work with someone who you don't have to sit there and explain the business model to. And we want to be able to meet that need in the marketplace. Now, look, it might not be for everybody, and not every product is, and every project's going to match a conventional or non-SBA loan. So it always comes down to that individual conversation. The old adage in the answer in business school, right? It depends. And it really does depend on the specific situation. But I encourage everybody, reach out and talk to me, because maybe SBA is a great product, maybe it's not. Maybe maybe conventional is a great one, maybe it isn't. Don't just assume. Talk to someone who knows what they're doing, and someone who's worked in the space for a long time, and let's collaborate on that to meet the vision.
And just a reminder real quick here, we've got just a few minutes left. Any additional questions that you'd like to have answered, if you'll put them in the question box here, we try to get to them real quick here.
Alan, while people are typing, common question I get from a lot of people, well, what's the right number of stores to own? And I've never quite known how to answer that, because I always think back to that gentleman in Texas that walked up to me. But I don't know. What do you guys see? I mean, what are you seeing out there? It's too hard for me to answer that, because it's a little too broad. But
that's definitely depends answer, Greco, because it depends on the personality, depends on location, depends on their family situation, where they are in their whole life plan situation. It could answers could range far and wide in the situation of that.
Some people just love it. Some people just want to keep growing and growing and growing. Some people are happy with one store, so it's
I mean, I talked to a gentleman the other day, I won't give any specifics, that He was in his mid-50s, and he'd already sold a very large operation a number of years ago. He's ready to start another one. And he said his wife kept asking him why he wants to do it. And I said, you need to tell us because you're an entrepreneur.
Yeah,
That's your
that's
answer.
true. Yes.
Once an entrepreneur, always an entrepreneur. And you
Mm-hmm.
you want to go from one transaction to another to another.
Yeah.
Here we go, Greco, from Kyle here. If a person is acquiring a second store, can initial store and entity be used as collateral instead of putting up personal property?
Well, I mean, that is a pretty specific question because there's a lot of things that have to go into that answer, but it depends on the loan amount, whether or not it's been secured, fully secured. It also depends on how much equity they may have in their personal residence. So it depends. Kyle, I would recommend reach out to me and let's talk about your specific situation because it depends also on what you're doing and buying. If you're buying real estate along with the other transaction, maybe that the real estate's fully securing the loan. And in that situation, the answer may be that you don't need to do that. It may not be. So it really depends. So I would encourage, reach out to me individually and let's talk about your situation and see what might be the right answer for you.
And Dennis wants to know what's the price per script if you're buying another pharmacy's books, and what's the most favorable purchase price formula of a pharmacy?
Boy, I mean, I think that's going to depend a little bit on the kind of scripts and what the market is willing to pay for it and what the financing will approve. I can't really comment on a range whether it's 9 to 12, 10 to 13, 10 to 6. That depends a little bit on the market. What was the second part of the question, Alan?
And what's the most favorable purchase price formula for a pharmacy? I think he's referring to something like EBITDA, I think, something of that nature.
Oh, I was
going
to say it's the one that makes the most sense in cash flows and the one that you can get financing for. I think that's the answer of it.
You guys do use EBITDA in some kind of calculation in your analysis, I believe. Is that correct?
We use a various form of EBITDA and NOI. Yes, we do calculate that when we're looking at whether a business is going to be able to support the long-term debt proposed, and we're making sure essentially that it's not over leveraged. And if it's not over leveraged and there's cash flow there, then it's a good deal. It's a good price. Now, how much cash flow, whether you're talking about in excess of $100,000 or $10, that's really going to depend on the skinniness of that, right? That debt service, how over leveraged or under leveraged it is. And so that's something that we work with our borrowers on and give them the best guidance that we can possibly do as far as what it looks like on their business and how it aligns with all those other qualitative factors that we've been talking about on this call as well. So it's really a blending of the quantitative and qualitative.
Sure. Scotty, you want to move the slides forward?
Yep.
Guys, I will just say that if you have any questions of us with anything that we've talked about here, here's our direct contact information and phone numbers and email. Also, don't hesitate to subscribe to our YouTube channel. We're pushing out public domain videos on pharmacy specific topics about every 10 days or so. Scotty, why don't you mention about the ARCS assessment that we offer?
Yeah, so we offer an ARCS assessment service here at Sykes & Company. So if you're a seller out there or you're a buyer looking to purchase potential file buy or another pharmacy, essentially ARCS assessment services, we get those accounting files, we look at them, we do a deep dive, we review the tax returns, give you that third-party overview of the condition of the pharmacy, good, bad, and ugly, the opportunities, issues, concerns that we see, and give you that important feedback that you need to move forward successfully with either your current pharmacy or maybe any other pharmacies you're looking to grow into. So we do offer that service. Actually, we got a slide on that. Let me see. Yeah, there we go. And so you can go to sykes-cpa.com to take a look at that, and we'd be happy to help any way we can in that endeavor.
Yeah, and out of that process will come actionable items that could be significant for your pharmacy, and you probably will get an idea of issues and matters of your pharmacy and tax issues as well that perhaps you have not had previous knowledge about. So our firm works with hundreds of pharmacies all over the country, and this is all we do, working in the pharmacy industry space, and we'd be delighted to help you in that process. And let's see if there's any other questions here, guys. I think we've got most of them answered, if I'm not mistaken.
Well, Greco, we appreciate you being on, and this was a great one. So we might have to do this again, but we certainly appreciate you getting on and all you and Live Oak Bank do for the industry.
Absolutely. And for those of you that have signed up for this, there'll be a recording pushed out, a recording link pushed out to you within probably the next 36 hours or so. So just be on the lookout for that. Greco, again, like Scotty said, we appreciate you being on the Master the Margin series today, and look forward to seeing you at a trade show in the not too distant future.
Yeah, thank you very much. I appreciate being on here. I appreciate all you guys do for the space and for the industry. You know, I think what you guys do is great. The expertise, and most importantly, you know, the straight shot that you give people and the honest assessment that you're giving them. I really appreciate that. We always appreciate the integrity of the financials that you guys do, because you know what you're doing. I always appreciate that.
Well,
and I just want to congratulate everybody out there for all their successes, big and small, their visions that they're doing. Please, if you have anything that's going on, or if you have a project in mind, reach out to me, reach out to myself and my team. We'll be able to talk with you and help you structure something that might work. And if we can't, we'll obviously give you perhaps advice or a referral of someone who can. And so I'm really in the business of helping people and educating people. That's my passion. And that's our dedication as Live Oak Bank to the pharmacy industry. Thanks a lot, Scotty, Alan. This has been great. I love it. I'm always happy to come back.
Just for our audience, we will be at the NCPA Multiple Ownership Workshop next weekend, and we'll be at the major shows in summer. Hope to see you again all at the recent trade shows this summer. Thank you very much. Have a good day.
Bye-bye.
Bye-bye.
Thanks, everybody.